How to maximize your money with credit cards. Welcome to Achieving Success Through Failure. So, are credit cards good or bad? Let's hear it from Dave Ramsey.
You have a lot of debt, you're misbehaving with money, and then you come off as prideful and arrogant about how you can handle your credit cards because you pay them off every month when 78% don't, and even those that do overspend, especially those of you with airline miles. It's the biggest scam in freaking history.
A lot of people are basically divided because some people say cut your credit cards, just use cash. But when you look at the rich people, most of them are using their cards all the time. Is there a big difference? Or should we actually think like the rich people, and that's why they actually have more money? So look at the things which credit cards actually give and what are the benefits. So in order to understand this one, what a credit card does is allow you to pursue a transaction without money, in which this will be paid off completely. So when using credit cards for a transaction, there's two ways to think about it. You're either paying it before the end of the statement so that you are not charged interest, or you end up overspending because you leverage too much on liabilities. So understanding that statement actually tells you that a credit card is not good, nor is it bad. It depends on how it is actually used. And based on what Dave Ramsey actually talks about, it's not that the credit card is bad, it's the overspending, which is actually the one that gets people in debt. The credit card just happens to be one of the tools that make it easy for people to buy without cash. However, we're going to talk about why it actually is wiser to use your credit cards. Number one, points.
For NBA history,
Points. Points is basically cash. You could either use miles. I personally just like points because I can understand the numbers game in which I can convert it to cash. Cash that goes back to my bank account. In a year, probably end up with close to $2,000 in cash back. Well, you probably say, you're spending too much. The question is, it depends on how you utilize it. And I'm not using my credit card to earn points. I'm using it as a form of payment, which gives me back points. It would be very unwise to actually chase the points or the miles by just spending. You just have to do it passively by utilizing on things that you would have actually paid either way. So, points easily converted is around 1 cent per dollar. In order to understand points, basically it's around 1 cent per dollar of purchase. That ranges from 1 point to 5 point per transaction depending on bonuses. And in some credit cards, there are going to be some introductions, which gives you a hefty cash back during the first couple of months. And in that aspect, why should you care about points? Because you've already paid for it and you're actually getting more money back. So you're basically paying at a discount. So is there a way that I'm being screwed by the bank? Well, part of it is actually getting your data on the way you're spending and in which they market to you as well. If you think about cost per transaction, credit cards actually charge between 1% to 3% per transaction when it is actually used. So that's what the banks charge. So if I buy a $100 pen, the bank actually gets up to $3, and the merchant actually only gets $97. Well, would cash be better in that aspect? The funny thing is, you're still paying $100, and the only difference is you lost that $100 in your pocket right now. And that goes to number two, which is leverage. We talked about leverage previously. And leverage is actually a good thing when it is used to buy assets and it is used cautiously. There's the word, cautiously. When you over leverage yourself in any aspect, that entails an increased or significant risk. Or if you leverage liabilities too much because you get too excited thinking that you have so much cash that you could blow and you're just going to go through monthly payment, that's how actually credit cards make money. Credit cards actually make money on people who don't pay them completely. That's why it's very important to understand how to use them. So if you're not paying your credit cards completely, the average APR is between 12 to 21%. It's more closely between 19 to 21% realistically. And that means if you divide it by 12, that's going to be around 1.5% interest rate minimum per month. So at $1,000 that you spend, you're paying $15 per month of interest. Easy ballpark there. And interestingly enough, in 2016, 38% of households carry up to $16,000 in their credit card. That basically is left there with interest being paid. And this is why the industry is actually worth $929 billion. And that's exactly why Dave Ramsey wants a significant amount of people to cut their credit cards, because they belong to that percentage who can't manage it properly. Number 3, building your credit. If you pay only cash, you're not building your credit. What is the credit for? Well, for buying a house, buying a car. Let's go back to video number 1, introduction.
Excuse me, love your car. What do you do for a living?
That car was actually bought with zero money down because of the good credit score. And it took 50 days before I made my first payment. Other things is you actually end up with better interest rates, because when you build your credit, it basically tells the bank and the companies that loan that you're actually capable and responsible payer. So it comes with that perks. If you do have a business and your business actually earns points that you would actually like to utilize those points for your personal trip. Do not utilize them for business expenses. Why? Because business expenses, when points are utilized, cannot be deducted because they're not cash. So you want to use your cash for business expenses. It could be your tax deduction, and use your points on non-business expenses. Another trivia: increase your credit limit. Oh God. Credit limit, what if it gets hacked? Banks actually are very good at it, in which you could actually dispute transactions. Why would I increase my credit limit? Not for spending, but actually for better credit review. When you have a $10,000 credit limit and your revolving credit is around $8,000 or $9,000, it actually gives you a poorer score because of maintaining a higher percentage in your balance. If you are going to maintain a balance in your credit card, it would always be prudent to actually keep it below 30 to 35% so your credit score does not get affected. What does that mean? Well, as I mentioned, if you had a $10,000 credit limit and you had $8,000 in your balance, then that would actually be 80%. However, if you actually had a $25,000 credit limit, and $8,000 would be below 30%, which would be the same value but a higher credit limit, still lower percentage, and still gives you more leeway in case you need to utilize it. And these are things that you should be considering if you have 0% APR, which is an introduction in some credit cards. But overall, my recommendation, try not to maintain anything, because you would be paying a very hefty fee of 19 to 21%. Lastly, you can actually monitor your spending. It actually gives you your monthly expenses and the breakdown. So it actually helps track your spending better in that aspect. The only thing that you really need is to be cautious about it, be diligent, and not overutilize it, because either way, it's the same money that you're going to be paying for. Things to watch out for. Number one, which credit card should I pick? Well, before you pick any credit card, look at your spending habits. How are you going to be utilizing it? And which actually gives you the most points? That's number one. Number two, I would pick credit cards which don't have annual fees. Because for an annual fee to be justified, that would actually force you to spend, and you could do the math at the end of the year whether utilizing a card that gives you more points but with an annual fee is more worth it versus one without. Other fees to be aware of. If you are buying any product outside of your country, make sure your credit card does not charge a foreign transaction fee. I have two credit cards which I actually utilize for these expenses. One is actually Bank of America Travel Rewards, but the better card technically is Costco because it has more points that come with the no foreign transaction fee. Other utilizations of the credit card: balance transfers and cash advance. Just be aware how much fees that they actually charge. So if you do the math and have to utilize them in your business, that it actually works out. Lastly, at the end of the day, understand what people's recommendations are. When you break them down to the basics, you will see that credit cards are actually a great tool. It's like holding a knife. If you know how to use a knife properly, you will make chopping a lot easier. But if you don't, you may actually get cut and bleed. And my last takeaway, develop proper spending habits and maximize your money with credit cards. Again, this is Paul Del Prado for Achieving Success Through Failure. Please click the like and subscribe button, and I'll see you next week.